Help capture the history of our markets by contributing to the John Lothian News GoFundMe campaign to support the Markets Wiki Education history-focused video series and more.
Advantage Futures is proud to sponsor JLN Video Series.
Many include a recurring theme of people helping others during critical times in their trading careers.
Too often today, when traders need help the most, their call is met with numbers to press on the phone instead of an actual person.
Advantage prioritizes you.
Personalized service, competitive pricing, aimed at giving you every advantage.
Make us your advantage.
Advantage Futures.
I grew up in the 60s and 70s, so I wanted to be an astronaut like every other little kid. I think my parents would have loved me to be a banker, or maybe even investment banking would have made sense. Any kind of professional or financial thing would have probably made them happy. Although the financial thing I ended up in was a little bit off the beaten path for them. I'd actually learned about futures trading while I was in college, and then I started looking into it. Some friends of mine and I kind of came up with an arbitrage strategy. We were trading one stock index future against another stock index future, and so we ended up coming out to Chicago to trade those. I didn't end up on the floor in that pass. It took another pass, but eventually I ended up on the floor as a clerk for Susquehanna in the early 90s. I ended up leasing seats at the CME and the Pacific Exchange. The first seat I did at the CME was this permit program they had, which was very cheap. You needed less capital. It didn't cost that much. So it was like, I think it was like $6,000 for the year. So it wasn't hard to finance, but you were limited in what you can trade. And so I think you could trade like Australian dollar and lumber, a couple other minor things like that. But then I ended up moving to like the IOM seat and then the full seat at the P Coast. I brought a couple of friends when I was in college and said, hey, let's try doing this arbitrage thing. One of them went on to have a very successful career at Credit Suisse. The other went back to his family's business, which was in the manufacturing area, but he stayed in trading. I stayed involved in trading for quite a long time. We still talk about it, and brought one other person into the business, a younger guy at like the exact worst time, right before the P Coast got really bad. And then he went and so we brought him in and he got trained right before our company shut down. And then he went to another company and had the same experience. So I always felt bad for him. The early hours. So I did trading on the Pacific Coast. I was in Los Angeles at one point. I had to get up at 4. When I was trading on the P Coast, I had to get up then. And just a couple of decades of getting up at 4 o'clock in the morning, I think that does have a bit of an effect on you. But I'm almost fully recovered. My family was not a Chicago family, so they didn't get my coming to the trading floor. They didn't understand that. My grandmother put it best when she said, I just wish you worked at Sears so I understood what you did. But my father, who was a banker, thought, being on the trading floor was just gambling. As far as the impact of my family and my trading, first of all, I have an extremely understanding wife who put up with my ups and downs. She was very patient. I think the other big impact was when my first daughter was born. And there was just some point there where I just knew I had to be more serious, right? There was people who were dependent on me. And so the level of risk I took on and how hard I worked at it just went up a level, because at some point, you have to step up because there are people who need you. If I could start all over again, I would have gone on the floor sooner. I ended up going on the floor in 1993, and I should have gone on the floor in 1986, 87. I think I would have done it sooner because it was a great experience. And I think there were probably even more opportunities to take advantage of in those years. I think one of my favorite memories from the floor was when I was trading in the Swiss franc options pit, and things got really, really exciting. I think it was either the Asian meltdown or long-term capital, one of these periods when the currencies took off, and I just remember like jumping up on the side of the pit. Our pit had like almost like a cliff, and then there's some railings, and like jumping up and hanging on with one hand and yelling at the broker who was there that I'll buy those calls, because the market was moving. You're trying to get their attention, and they're looking over somewhere else and having to just jump up there. So it was very physical. That was really fun. I can remember certainly some days when I was out on the P coast where, a couple of things actually worked out for me really well. Those were exciting times. I guess my worst memory of being on the trading floor was a period where I ended up being short gamma and some options in when the NASDAQ took a tumble. It was like March or April of 2000, and the market dropped really hard and really fast and bounced back really hard. And I just remember having to desperately sell stock to try to cover the delta that was coming, and then desperately buy it back later. And that was bad. Another bad day was a day when I had a spread on in the Australian dollar futures because we were rolling from one contract to another, and the Australian central bank picked that as the day to raise interest rates. And so I had a, no risk position on or low risk position on, and all of a sudden I took a pretty big hit all at once, and there wasn't really any climbing out of that on that day. What was really interesting is when you walked on the floor in the morning, there was an incredible energy. You just could feel the excitement, and you could almost smell the opportunity. You just felt like you knew there was exciting things going on, even though there were obviously days when nothing would go on, but you could really feel that sense when you started every day. There was a lot of camaraderie. You got to hang around with some fun people who were very interesting and funny. You sit around making jokes and things like that. And then the market would start to move, and you'd have some excitement. The orders would come in and you'd trade. And there was a little bit of like combination of fear and excitement when you were making a market. And then, you'd do that trade, and then you'd go back to, hanging around with people. Yeah. There were clearly some really amazing opportunities that would come across, and you just had to be patient. So there would be large periods where nothing was happening. You couldn't make money to save your life. But if you could survive and pay your bills, pay your seat lease, and hang out, occasionally there'd be some really amazing opportunities. I remember my best day very, very well. It was a day where I was trading Adobe options at the time, and we're heading into earnings for Adobe. And their earnings had always they've been pretty good. They usually beat earnings. So there was a tremendous amount of the public buying call options going into that. I had actually started buying options ahead, but couldn't keep up. And it was just the whole 2-week period leading up was a period of trying desperately to stay ahead of all the customers coming in buying options. And I ended up short a lot of like the front month, the 1 month options going into earnings. And obviously there was some fear because there could have been a big move on earnings. But what I only realized in retrospect is the public had bought so many calls that the stock couldn't really move much. So when the earnings came out and they were good, everybody came in to sell their calls right away on the opening on the next day. And so you had, the good news lifting the stock and all the call selling, keeping the stock tamped down. The stock ended up moving about $0.50, and then the volatility got crushed. And so by the end of the day, I'd made my year from that day. And it was a great day because obviously it's good when you make money, but it was also nice to have been right, have actually had a really good outcome because I'd actually kind of figured something out and been right instead of just luck. Yeah, I think my worst day on the trading floor is probably the day I left. Leaving in 2002. I mean, there were bad days. There were days where I had losses, but leaving, it was, first of all, it had been a really, really fun, maybe 10 years on the trading floor, and that was coming to an end. But also, it was just this grinding, depressing inability to make any money over months and months and months, and finally just throwing in the towel. That was a bad day. Yeah. My trading style was always kind of long gamma, and I think, I mean, partly, you don't want to ever have the big blowout loss. And I always liked the idea of big gains. And whenever I would trade options and I'd see that big position, that sort of smile where you could see where you'd make a lot of money if it went to either of those places, that always sounded exciting. But I think I carried that philosophy with me, and I've always kind of been a person who is more of a long gamma type player. I've been involved in a couple of startups where, you put a lot of time in, but you might have a big payoff. In one case, actually had a decent one. And then also got involved in like cryptocurrencies in around 2014, because it was a very similar situation, right? You were looking at things that might not have worked, could have gone to zero, but it had a lot of upside. And I think that sort of style and philosophy carried forward. My trading style changed mostly because of change in products. When I traded Australian dollar futures, it was a very simple trade. Then I moved to doing currency options, which you obviously had an inventory of options to manage, but it was all in one product. Then when I went to doing stock options, you would end up with positions in a number of different equities. And so you had to manage that inventory. And by the time I left, the firm I was with, we were doing we were basically trading everyone's individual equity options positions against like an index, and we'd be short the index options and long the underlyings. You just had to keep changing what you were doing, because the edge got harder and harder to find, and the markets got more and more competitive. We had a number of dramatic events and dramatic price moves. We had like the Russian debt crisis and the Asian debt crisis and long-term capital. I remember when 9/11 occurred, I was, I think, one of the few guys in my trading group who was actually long options, long gamma. I think if anything, those events always cemented that, always wanting to kind of be long gamma rather than short it in my mind, because you just see these huge moves and some people get blown out, and instead you would make a little money. So I learned a little bit about how to trade options just on my own, but then I ended up as a clerk for Susquehanna, and I learned most of what I knew from being there and training under the group of people I worked with at Susquehanna.
Advantage Futures is proud to sponsor this JLN video series. In many of the series videos, there are recurring themes of people being helped at critical times in their trading careers. Too often today, when traders need help the most, their call is met with numbers to press on the phone instead of an actual person. At Advantage, you are our priority. Everyone needs an edge or advantage when trading. Make us your advantage.
John Lothian News would like to thank those individuals who have contributed to our Markets Wiki Education GoFundMe campaign. Their financial assistance allows us to produce and distribute videos like this for our Open Outcry Traders History Project or the Path to Electronic Trading video series. Join them in supporting John Lothian News, capturing the history of our industry.